Today, we're cracking open a really powerful lesson from a legendary book, The Intelligent Investor. We're diving into Chapter 8. And it's not really about picking the next hot stock. It's about something way more important, mastering your own mind when the market starts going crazy. Seriously, if you can get this one thing right, everything else in investing just falls into place.
So, let's start with a quick gut check. Be honest with yourself for a second. When you see your portfolio bleeding red, when the market is just tanking, what is that first, immediate feeling you get? Is it that cold knot of panic in your stomach, or maybe something else? Your real answer to that question is going to be the key to everything we're about to unpack.
And see, that feeling, that gut reaction, it leads us right to the absolute core idea of this whole chapter. The wild swings of the market, the ups and the downs, they aren't the actual problem. Nope. The real danger, the thing that truly destroys wealth over time, is how we choose to react to them. It's a huge mindset shift, and it's what separates the really successful investors from everyone else who's just stressed out all the time.
Okay, so first things first, we have to accept a fundamental truth about investing. The market will always swing up and down. Always. Trying to invest without volatility is, well, it's like trying to surf without waves. It just doesn't work. These swings are a feature of the system, not a flaw.
Exactly. Volatility isn't a sign that things are broken. It is the system working as intended. You can almost think of it as the price of admission you have to pay to get the long-term growth that markets can offer. And once you really truly accept that it's normal, you stop seeing it as this terrifying threat, and you can start to see it for what it really is.
Now, when faced with these swings, most people, they get pulled down this really predictable and frankly dangerous path. It's a path that's governed almost entirely by emotion. And this is where the real damage to your wealth actually happens. Does any of this look familiar? Yeah, these are the classic traps, and they're driven by some really deep-seated human psychology. When the market plunges, that fear of loss just screams at you, sell, sell before you lose everything. And then, when it's soaring, that fear of missing out, or FOMO, it whispers in your ear to chase that hot new thing, usually right when it's at its absolute peak.
And reacting this way, it turns the entire logic of investing completely upside down. It literally forces you to do the exact opposite of what actually works. You end up selling low because you're scared, and buying high because you're greedy. It is a guaranteed recipe for failure. And it all happens because you let the market's mood swings dictate your actions.
But, thankfully, there is a much better way. The intelligent investor learns to choose a different path, the path of reason. This is all about responding with a cool head and a disciplined plan, not just reacting on impulse.
And this just lays it out so perfectly, doesn't it? The emotional investor sees a market drop and all they see is crisis. They follow the herd. But the rational investor, they see the exact same event and think, opportunity. One follows the crowd, sometimes right off a cliff, while the other sticks to their principles and their plan.
This right here, this is the whole game. The market is just a messenger. It's giving you data. It's telling you what prices are today. That's it. It is not your boss. It is not giving you instructions or commands. You are still the one in charge.
So the big question is, how do you actually stay on that path of reason when everyone around you is freaking out? Well, the answer isn't about having a genius-level IQ or some fancy algorithm. It's about something much more fundamental, your temperament.
Temperament is basically your emotional armor. It's that inner discipline to watch the market go completely nuts, to acknowledge the chaos, and then to calmly go back to your original plan. It's like building this fortress around your strategy that even your own panic can't break through.
And man, this slide is so important. Look, you can be a genius at analyzing companies, but that is completely useless if you just panic and sell everything at the first sign of trouble. Your emotional discipline, your temperament, is the bridge that connects your smart strategy to actual real-world success.
Let's just hammer this home one more time, because it's that important. Burn this quote into your brain. The next time the market is plunging and you feel that panic rising, just repeat this to yourself. The market is just giving you new data. In this case, lower prices. It's not telling you to sell. It might just be telling you there's a sale. Okay, so how do we make this practical? Here's a 4-step framework you can use. First, expect volatility. Don't be surprised when it happens. Second, you gotta detach from the daily noise. Stop checking your portfolio every 5 minutes. Third, reframe how you think about it. A price drop is only a real loss if you sell. Otherwise, it might just be a bargain.
And finally, number 4, trust the long-term plan you made when you were calm and thinking rationally.
And really, that's what it all comes down to. The market is, well, it's moody, it's emotional, it's unpredictable. It's going to have good days, and it's going to have some really bad days. But you don't have to get swept up in its drama. You have the power to stay rational, to stay disciplined, and to stay in control. The market will always have its moods. The only real question is, will you let them become yours?